Okay. Are you, if you have to guess, out of all of your pool of investors that you have now, would you rank LinkedIn as your top, your number one, or and if so, what are a couple other ones that has been working well for you?
So LinkedIn is certainly a probably, yeah, I would say number one in terms of me getting in. I like to do conferences, but what I've found obviously is you go to conferences, you're really running into a lot of people are all capital raised. And so with LinkedIn, you're filtering out your one-on-one. The more you are able to personalize that introduction to someone, the more likely you'll get it. I would say other areas that can be very helpful is certain, I would say, how do we call it? Organizations that focus around investing and all. So I'm part of some, let's just say like IPO as an example, or organizations like that where it's focused on people that are looking to invest or they're full of high net worth. So I'm involved in organizations similar to like YPO, and there are many of those are great areas that you can interact with people. It all don't have to always be talking about real estate, but it's all about building rapport. And I think that's something that I think is extremely important when you're looking to build long-term capital raising abilities is to look at it as not a single transaction, but as repeat investors at all. I would say as of right now, probably 60 to 70% of all the money that comes in on every deal with me are all repeat investors and all.
Mm,
So it's a lot of it are investors once they've built that trust in you, they've done a deal with you that they really enjoy and the experience with you they enjoy, then they'll come back and again.
gotcha. Very cool. If you have, and then within your investor base, is there a type of person, like a type of avatar that you focus in on that you have the most of, or are they all over? What's yeah.
I personally, everyone's different. My personal avatar are more experienced real estate investors. So I tend to go after investors that have some real estate experience. Now, it could be any kind. It could be a lot of them are single family investors and all, they're Airbnb investors. And my the deals I do oftentimes I always tell people is a great compliment to what you're doing. You're investing in single family, but it can be actually difficult to scale over time, especially if you're the one that's managing it. And so I have opportunities for you to get returns that are almost in line with what you would make being managing own property and all, but you can do so passively. So experienced real estate investors are great because you're not re-educating them. You're speaking the same language. They oftentimes understand what is good and what isn't at all. They understand things like tax benefits and all. Or in some cases, because as you mentioned, I do a lot in private credit, there are people that are doing private credit or doing some private money lending. And so it's easy to talk the same language because they're more experienced. So I personally like to work with experienced investors and all because that's one barrier less to
Mm,
have to deal with. In my experience, oftentimes when I talk with people that are more new, they do have a little bit of they put up a little fence or gate. They're always like, oh, let me talk to my financial advisor, let me talk to my CPA. At the end of the day, the financial advisor's recommendation is keep your money with me.
right. Yep. Um, in terms of targeting the more experienced real estate investors, is that something you're able to target upfront in your marketing and in your outreach? Or is that something you won't discover until you're on the phone with them, finding more about them?
Yeah, Limehit has a very robust search engine, especially with Sales Navigator, and so you can take you can this is all experimentation. You're figuring out, okay, at the end of the day, what kind of keywords, what kind of things you're searching for on people's profiles that helps you determine kind of their level of sophistication with regards to real estate. But that's really the initial level. I like to see someone that has done some level of of real estate and all. And it could be very little. That's totally fine. But at least then in the initial calls, when I do a little bit more discovery in figuring out more about their journey. So the first question I always ask people when I get on the call is, walk me through your real estate journey. Tell me a little bit about what you've done and all. And that gives you a lot of information. I think that's extremely important. And they always teach you in sales one and all is your goal is to solve a problem. And the only way you can solve a problem to discover that when you're speaking to the 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 prospect at all. I like to spend the beginning of every call, maybe introduce a little bit myself, but I really take the time to let them be the one to do the talking and all. Let them reveal what their experience is. Let them tell you what they do or do not like about investing in real estate. Maybe they've been doing things really well. Maybe they're extremely happy and all. If they are, that's totally fine. Our goal is I tell them that, hey, I'm not trying to replace what you're doing. If you're doing things successfully, that's fine. Here's something we're doing, and all. Maybe it's a compliment to what you're doing. Maybe it's not. Maybe it's down the line and all. But it's all about discovery and making sure you understand that.
You talk a lot about building the relationship, like doing the discovery and not jumping in talking about real estate right away. So at what point do you follow up to have specific conversation around investing in your real estate deals?
Yeah, sometimes the first call does not go into real estate at all. Sometimes not only do I dig into what their real estate experience, but I love to dig into what else they're doing and all. It's all about building that rapport. Maybe there's something that oftentimes there's a certain area we connect over and build rapport over, which has again nothing to do with real estate. Maybe it has to do with being an entrepreneur. I meet a lot of people that are entrepreneurs, they're buying businesses up and all, and it's always good to talk over it. So I think, again, can't stress enough the importance of taking time to build rapport by figuring out the things that you guys have in common. And the more you have in common with a person that you're meeting, the more likely they will not only spend more time talking to you, but more likely that at some point they may become an investor and all. I think a lot of people spend too much time pitching a particular deal and all, and maybe that particular deal was not the right one for them. And that's extremely important because every deal has different risks and rewards. They have different hold period, they have different liquidity. You have to understand your opportunity very well. And so that's another thing I want to stress for people is make sure you understand your deal inside out. Okay. Take the time to digest into smaller bite-sized pieces and all, because you might get a deck from particular sponsor you're raising for. Take the time to really understand what's going on and all. Understand what's the value add, understand the debt, understand the return, understand the investment structure, understand everything about it, understand the location. The more you can talk intellectually about a deal, okay, when it's the time to talk about it, the more that someone will feel, hey, I feel more comfortable talking to you about it. The people who aren't able, that doesn't take their time to do their homework and understand a deal are the guys that's going to have a lot more difficulty raising money. And that's understandable because if you don't understand the deal, then why would someone put the money in with you?
Yep. Let's transition and talk about the credit side, also the preferred equity side. So share with us outside of the normal multifamily syndications, raising money for common equity, what other type of raises have you done? And then we'll dive deeper into those type of raises that you do.
Sure. As you guys probably know, the typical structure that most multifamily syndications do is, hey, we've got the senior debt, the mortgage, and then below there you have the equity. So maybe you're leveraged at 60 or 65% senior debt, and then the rest 35, 40% is equity. Now, the problem I have with equity is that the only way you can really make money as equity is you really have to sell the property for more than what was initially invested in because the equity is you're the last dollar in. Okay.
Yep.
And also you're the last dollar in, meaning that if the property sells for less than what was put into it, you're the first dollar that gets cut away and all. So has been dangerous over the last couple of years with a lot of properties, and unfortunately has oftentimes nothing to do with the managers, but it could be market conditions, it could be the debt and all, which has led to a lot of properties actually losing value. So for instance, maybe the property was a $10 million project, but you end up having to sell the property at 9 million. If you are that one single million gets entirely wiped out from the equity. So about 2 years ago, at the beginning of 2022, as I saw the interest rates rise, I realized that there is going to be a growing opportunity in investing more in kind of the debt, private credit side versus equity.